The next one is Reinet, which is also part of that Remgro group that got reorganized in 2008. Reinet, we'll talk about in a minute, is a Luxembourg-based company which has got a big stake in British America Tobacco but remains listed here. Plus, it's got some other investments in financial services, property and the likes. Big though, 61 point nothing billion rands. PE ratio 22.5. That's also a tough one to put a fork in because the PE comes and goes. Dividend yield based on recent payouts of 0.83%. So just update me. Relative to the BAT holding, how significant are those other assets?
Okay, it's a good question. So BAT holding, rule of thumb, about 70% at the moment. Other holdings, 30%. Of that 30%, a good half or 15% is made up of their second biggest holding, which is the Pension Insurance Corporation, essentially, which is a huge business based in the UK, which basically gives you a service with regards to managing pension funds. Got about £8 billion under management, a significant amount of money, and definitely a follow through there of some decent earnings upgrades.
So do you like that business? Profitable, well
I like
run?
British American Tobacco, and I like the pension corporation that they hold. The other businesses are a little bit more difficult to understand. They are private equity funds and unlisted funds and all these kind of funny things.
And a bit of property in the US.
Goes a little bit over my head. And some of them do extremely well and the other half do tremendously badly.
Okay, but let's go back to the cigarette holding, because I've long not been a big fan of BAT, but if you look at the chart of BAT in London, it had an upward lift when the Brexit vote happened because the pound weakened. Then it went sideways for a while. And then since the end of last year, like since December, it's gone
Yeah, so it's gone from £40 to £50, and now it's from 50 to 52, 53. Expectation is 58. Why? What is happening there? Okay,
are people smoking more? Or
people are smoking more, Paul. I mean, if you look at the World Health, you know, their opinion is that smoking is still a serious health issue. There are more people starting to smoke than quitting. That comes from the horse's mouth.
Where are these people?
They're in emerging markets, third world countries, where it is not as important to worry about your health, with respect, in the sense that the education is not as much as we have in first world countries, and smoking is a luxury that you didn't have before. Now you've just reached the middle market.
Because they bought businesses in countries like Turkey and Indonesia and Colombia.
Well, that's where they're big.
And they're now taking those people from smoking low quality funny cigarettes
smoking
towards,
Lucky Strike and you know, so on and so forth. The other important thing is third generation cigarettes. The e-cigarette is really, really taking off. I thought you were going to say
third generation smokers there.
And I don't think they're alive, unfortunately.
That's once granddad has died from smoking and dad died from smoking, and now you're the third generation.
But now you can smoke a healthy cigarette, an e-cigarette. No, it is. And that's big money.
Wait, there's something else about Reinet which worries me, and that is the 10% hedge fund style fee that the Rupert investment company charges based on the revaluation.
So it's an only worry if you don't get a return on that money, in the sense that the management charges a 10% management fee, and if they're not managing the fund well, it's not worth it. And they are. I mean, the compound average growth of the fund's about 15% year after year. Is it worth 10%? That's a bit steep, but remember, as a South African, from a South African's point of view, you can get involved in a company listed in Luxembourg that has all its assets offshore, completely rand hedge. Large chunk of that asset, I feel, is a very, very stable defensive business, giving Reinet a great amount of cash flow through dividend. And Reinet uses the dividend to invest in other businesses.
And it must be said, I was very critical of the investment team, saying, why haven't they shipped out all of those cigarette stocks? Well, you know, they didn't.
British American Tobacco is still doing very, very well.
Did we look at the share chart in rands? Yeah, I guess that move there would be corresponding to the sovereign debt downgrade and the attraction of rand hedge shares coming through.
So Reinet, you can see tremendous growth. Obviously, the weaker rand helping things. And then from about 2016 June, since Brexit, you came off, I think it hit a high of 36, and we went to a low of about 28, and now we're back up beautifully above 30.
Okay, hot or not?
Definitely hot. I like the stock. Absolutely. Long-term investor, not a short-term punt. Something you can buy and put in the bottom of your drawer and forget about. If you had to choose between British American Tobacco and Reinet, I'm still leaning on owning direct British American Tobacco shares. But if you want some diversification and some extra flavor with some follow-through in the pension corporation, go for some Reinet stock.
Okay, I'm going to go with not hot. I don't want no cigarettes in my bottom drawer. Otherwise, when I open my bottom drawer to take out my underpants, they're going to smell of tobacco. That's not a good thing.
It's a great business, though. You can't deny that. Not a great product, but it's a great business model.
Excellent. Good.